So we're going to talk a little bit about data-driven demand generation in financial services, and a little bit specifically around how we think about optimizing engagement, nurturing our leads, growing our pipeline. I think we've got great representation from both a B2B and a B2C perspective, so I'll sit here in the middle. Let everybody settle. So we are, it's us and then lunch, so just hang tight. It's not beer, but it's lunch, so it's the second best thing. Thanks for joining on the stage. Again, my name's Corby Fine with IGM Financial, heading up our digital marketing function, and I appreciate the opportunity to be here today. I'll let the panelists introduce themselves, maybe starting on my right, and we'll work across.
Sure. I'm Madison McKee. I work for CG, or Canaccord Genuity Wealth Management.
Hey everyone, I'm Andrew Marsh. I'm VP of Strategy at Search Engine People.
I'm Sarah Madden. I'm Growth Marketing and Communications Lead at Box Insurance.
Hi and good afternoon. I'm Anuja, and I've been in digital marketing for over 16 years and been fortunate to have worked most of those in the financial services industry, mostly with American Express and most recently with First West Credit Union.
Awesome, thanks. Thanks for being here today. So the word or the term demand generation, it's one of those ambiguous, means something different to everybody kind of a term. And so I think it's important that we baseline and just make sure we're all talking from at least our own personal scorecard and definition, or maybe we're aligned. I think we'll just go right across on this one and maybe start off from that. Yeah, why not? Next time you won't.
Yeah. So within the team, so I'm VP of Marketing, I probably should have said that in the beginning, but within our team, we actually market B2B and also B2C. So within the B2B division, we're really marketing to advisors and bringing their book of business over to Canaccord Genuity. With the B2C, we act as marketing consultants for all of our advisors to market and gain more clients for their book of business. And so the majority of this panel, I'll be speaking more to the B2C side, just because we're doing a lot more work from the demand generation side there. But with us for demand generation on that side, it's really focusing on the engagement, the awareness, the engagement, and the conversion for clients with our advisors. So the difference for us is more so not the clients that we have are typically more sophisticated. They have to be $1 million plus in AUA, so they understand the value of advice. It's not educating them on that. It's educating them on why an independent or boutique firm would be possibly a better place to place your money. So a lot of that is just awareness around, why an independent would be great and why you should be moving over.
Yeah, like right there, even just one word of an advisor is that recruitment versus demand gen,
Right.
But yeah, interesting. I want to throw to you, Andrew.
Yeah, I view demand gen as full funnel marketing in its simplest of terms. At an agency world, I tend to live more at the bottom funnel lead gen side of things, and that tends to be where our clients are struggling the most. But I view it as full funnel marketing, trying to create interest in the products and services that you have, and then of course move everyone through the funnel and then capture the interest at the very end and turn that into paying customers.
Awesome.
And
Flip
to
Sarah.
add to him, I would say it's more about quantifying and qualifying everything that you're doing, right? So you have the technology to measure, and you also have the tools in place to act, right, on that demand. So when you get that intent signal, you can, strike when it's hot.
We're going to talk tools and tech. I like the word intent.
Mm-hmm.
A requirement of demand gen, I guess.
Mm-hmm.
Someone has to choose to
yes.
want to participate.
Yes, for sure.
Makes sense. Anuja?
Yeah, so I really come from the B2C world, and from a B2C perspective, demand gen is a little different when we compare it to B2B. For us, it is not so much about the pipeline creation or the lead capture, but it is really moving a consumer from just the brand curiosity into conversion. And while like B2B would probably focus on white papers, webinars, and long buying pipelines, for us in the B2C world, it is really more about being there, showing what your brand means in a very personalized and through a personalized experience, so that they move really from that brand awareness to conversion. We focus on creative optimization. We focus on what is the hook, that message that needs to be delivered very clearly and compelling in a compelling manner, and really what is that you want to design your offers. Maybe on the fly you want to change those. So it's really about all of that, and not just about the lead capture or pipeline building.
So you said an interesting word, which was funnel, as sort of a process or sort of a journey through the demand gen exercise. So if we talk about KPIs, metrics, how we monitor and what data we look for to determine success, obviously across a funnel there are different measurements and different KPIs at different touch points. But if you had to say, there's one, maybe two, I'll give you some slack, most important KPIs for your individual businesses that say, hey, we're doing the right things and we're on the right track, what would that look like?
Yeah, so again, as I was mentioning, that the B2C world, the purchase decision journey is very immediate and sometimes more really emotional. And the KPIs really need to follow that fast-paced and also reflect the intent, but also the action. Which is where, from a KPI perspective, I think what we do is we reverse engineer our KPIs to the growth goals. And what I mean by that is it needs to ladder up to the business goals ultimately, the real business goals, not just the media metrics in terms of the number of signups or the number of leads I've acquired and so on and so forth. So when it really comes to KPIs, it could be, when I say business driven, it has to be maybe how many credit card acquisitions have I got. Not just how many people signed up for a particular bank account, but how many funded the bank account. So it's really that end value, the action that they have taken, those are more important to me, every Monday morning when I wake up.
Got it.
Yeah, when it comes to KPIs, like I would actually just back up a little bit and I would say, who do I have and what do I want them to do, right? Because it's a bit harder to say like one or two KPIs for the full funnel. So it's like, what do I want my MQLs to do, right? How do I want my leads to go into an MQL, right? And then you would measure conversion across the funnel. And I think that's probably what you really want. It's like, how do I up conversions, right? But it's based on like the collective of everything that you want them to do. And it's like, what do I want the high value leads to do? I want them to book a meeting, right? I want them to get on the portal. I want them to make an insurance submission, right? So that's what I would base it on, because it's too generic for me to say one or two.
So at each of the different stages of funnel, the metrics change, but you even said the potential level of engagement of the audience changes. You said book a meeting, which probably goes right into the side of getting your $1 million plus high net worth AUAs to book a meeting with an advisor. So what does that look like then on your business?
Yeah, I will give the generic answer and say ours is focused more on how many leads are coming in. So we have about 154 advisor teams. Our team has about 15 advisor teams that are working with us from a paid lead generation campaign perspective. So of those 15 teams, the most important KPIs for them is how many leads do I have and what's the pipeline value? How much money do I potentially have coming into my business if I close these clients? What we're trying to get to as a team, because we're still fairly early in this stage, and we'll get to this probably later, is what is the ROAS and what is the true ROI of these campaigns? And without the data to prove it right now, we're working on that. We can't report on those, so we're focused more on the generic right now.
So not being able to report on it might be something an agency person might be able to help us with. So what do you see across clients as interesting KPIs?
Yeah, so it's funny. We report on arguably too many metrics. That's largely
the agency
asking.
said it. We didn't say it.
A lot of times, in fairness, it's clients saying we want this and we want that. The reality is, what everyone wants at the end of the day is revenue. So pipeline growth and revenue aligns very much with what you said. When someone comes to us and says, I want to increase my organic traffic by 20%, that means I want to increase my revenue by 20%. When we say, I don't think my ad copy is very strong, you're saying I'm not getting enough ROAS from my paid campaigns. It all boils down to revenue at the end of the day. Otherwise, it's vanity metrics. So when we look at those large reports, a lot of that is fluff, and there's only really maybe 3 or 4 on that sheet that actually matter at the end of the day.
Yeah, and maybe just to add, you would have probably like your leading factors and your lagging factors, right? Because that's also, you're going to know what's going to influence downstream later on, right? So defining that, I think, is really important.
Yeah, we often talk about signals versus KPIs. So, it's funny for an agency that did a lot of SEO work. When you think of ranking number 1 for a keyword, you may think that that's the primary KPI that you're going for. That's a signal. It's a barometer. It implies that success is likely going to come, but it's not a guarantor of success. The only guarantor is someone fills out a form and at some point gives you a credit card or pays an invoice, right? That's what matters at the end of the day.
Yeah, the intent versus the outcome.
Yeah.
And I think somebody said intent before. I think that's important. These all kind of lead to maybe the conversation around your actual strategy for driving demand then, and maybe start with Sarah, because you kind of threw it out as it's big, there's multiple facets, different points of time. When you think about the strategy that you're implementing to drive that increased demand, where are you as an organization in the journey, as a team? What are maybe some of the, what you can share, sort of current goals, or maybe even going into 26 as you're planning? Like, what does the next stage of what you're trying to evolve look like?
Yeah, well, right now, like, we're very strong top of funnel, right? So we're bringing in a huge amount of leads. So right now, it's about quantifying and qualifying those leads and bringing them down the funnel. So what I actually did last week, fresh out in my mind, is that we actually defined our funnel, right? So we actually defined it. So we went like MQL, NQL, SQL, SQO, customer, and it's what are the criteria that make those part of our custom funnel that's going to generate the results that we want. So we are bringing in lots of leads, but the next step is, hey, are these leads good, right? Are they actually going to do what we want them to do? So we are going to go through a process with sales where we sit down with them and we say, we actually implemented lead scoring too. So we have 106 MQLs. It's very exciting times for us. And we're going to have sales go through them and then also tell us, like, what is your qualification criteria, right? Like, you need to validate this work that we've done and tell us, are these good and are they going to move down? But I guess I would say in terms of our most effective strategies, like webinars have been our most effective strategy. A lot of like the trade publications as well, like being in insurance events, insurance loves events, so dropping your business card in the fishbowl and that type of stuff. So we still have to mix kind of like what the industry wants in that traditional perspective, also with the new digital stuff as well.
So on the digital side, obviously the end consumer has a big desire to do more stuff on their own. So what are you seeing as sort of key to strategy now?
Yeah, so because when we are dealing with, let's say, credit cards or a banking account, it's not so much about dealing with sales teams like what you have to do right now, Sarah. But so the strategy here really revolves around understanding that audience. Who are they? Right? Where do they spend most of their time? What motivates them from a financial perspective? What are their financial aspirations? So what comes into play is really the first party data. So we use the first party data and then layer on, of course, all the other things, the behavioral data, the geographic data, the psychographic data, and really we use tools like, CDPs, GA4, Environics. So we use all of that to really create that rich profile of the customer and understand not just who they are, but go beyond demographics and focus on what are their financial aspirations. Now that helps us define our targeting. And that's when we would go ahead and create a full funnel media plan to target them in paid, earned, owned media, whatever. And if I may, I'll give an example here. While my time at American Express, we were launching a new credit card. So in terms of this, we launched a teaser campaign way before the launch. We got sign-ups, got the lead capture in the true demand gen sense, the lead capture, and then had a soft launch for those people who signed up for the card. Now, what that helped us is really create that demand and the buzz around the new credit card offer. And then, of course, the regular stuff about emails, lead nurturing, but then what helped again was the first party data, creating the lookalike, of course, and finding what is going to motivate these people who have signed up to actually apply and get approved. So that is where the strategy of first-party data segmentation really comes into play, and that's where we would start when it comes to B2C.
Free cash works too. So maybe your newish program, what are you seeing in early days as working, and what are you thinking about maybe next in the strategy of trying and testing?
We're pretty far behind. I wouldn't say far behind, Sarah, but we haven't defined. Everything at this point is an MQL. We work. I guess the best way to describe how we work with our advisors is, you think of RE/MAX. Every real estate agent has their own brand, has their own website. This is how our advisors work as well. And so as part of that, all of our advisors have different value props. They have different ways of working with clients. They also have different clients that they work with. Each one tends to niche in a certain subset of sophisticated investors. So for us, there we go. So for us, it's about working with each individual advisor to figure out, what is an MQL for them, and we're starting to get there. But it's bringing them down into the funnel and utilizing different avenues right now and testing and learning of what is actually working. Is it a webinar once you get those leads to come in? Is it an email drip campaign? Is it bringing them into a booking right away? Sometimes that doesn't work. They need to be dripped on. So right now, the strategy, top of funnel, is we're supplying them with kind of top shelf thought leadership content that allows them to just be in the marketplace, sending out thought leadership content, and then we're helping to define what those deeper funnel metrics are and what the MQL and then eventually what the SQL looks like for them.
Yeah, the complexities are so vast, from a standard product like a credit card that everybody gets the same offers, value, incentives, interest rate, to supporting hundreds or thousands of individual sort of business owners or advisors who have their own unique spin on things, and being able to manage though a single process against both. You kind of see that from a different perspective. Instead of advisors as your clients or partners, you've got clients, different companies.
Yeah.
What's working across the board?
Yeah, it's interesting. So all the approaches described are likely what I would do if I was in-house somewhere, but at the agency world, we're solving different problems. So typically our financial services clients come to us and they're often doing a really good job at the top and middle of funnel, but they're struggling at the bottom portion of the funnel, meaning not 100% of those people that get in the funnel are going to become customers. A lot of them are going to go back to market. Plus, what about everyone else who's in someone else's funnel and decides to go to market? How can you bring them over your way? So I tend to look at the funnel in reverse, and I say, what do we need to do that's a must-win item? What keyword do we need to rank for? What campaigns do we need to run? What data do we need to connect that's going to allow us to acquire customers late, in the very, very late stages, at a reasonable cost? And that's the biggest challenge. It's often expensive to acquire customers at the bottom of the funnel. So we're always fighting the battle of trying to keep that cost down. And then we move back up funnel and start to support clients in those different aspects. But typically it's just an opposite view of the funnel.
Got it. I told you we'd come back to the tools and technology question, so let's go there now. So maybe we'll throw to Sarah first. When you think about effective technologies, effective tools, you talked about different the webinars and assets and content and stuff like that. What's really working in terms of bringing in your quality, and then in terms of maybe the channels themselves, because you mentioned a bunch of things. There's tools, data, technologies, then there's the actual channels. What's the mix that seems to be driving insurance intent right now?
Yeah, I would say, in terms of the tactics, it is the webinars for us, and also the events and the people that are on the ground. And then the technology piece, so we as a marketing team, we're very tech forward, right? But then sales isn't, right? So right now there's going to be kind of working with them, lock in step, and doing that, learning how to input in, and we use HubSpot, by the way, so HubSpot marketing and sales, and then we're looking to add some other tools because we did hire a demand gen manager, so she'll want some new tools for that.
Why do you think sales is not up to? I think it's a something. Sorry if you're in sales in the room, but
yeah.
I agree. Why do you think that is?
Yeah, it's just the businesses that they came from, right? So our head of Canadian distribution, she's really great, and she wants to learn, right? So it's just how things were done. And I also think technology changed really quickly, or how people use technology because of COVID, right? So insurance was it's a people's business. It's you're showing up, you're at conferences, you're on the road, you're talking to people all the time, right? So you don't necessarily need the technology to do that. You're making phone calls, right? So it's a different type of approach versus kind of the B2B SaaS model, and those personal relationships really matter. But what's really good about we're a scale up, right? So
sure.
People are interested in doing no things. We don't have any resistance from our sales team, which is really good. So when we showed them the strategy or talked about, hey, we're going to bring you leads that are qualified. Right now they're talking to everybody, so we want to narrow that gap for them so they can have better conversations, right, and have a more effective use of their time, and they're totally on board for that, right, because who wouldn't be?
Well, I don't know, Madison, who wouldn't be? So when you think about all those advisors, sorry, that's a perfect lead.
Yeah.
What tools and technologies or assets are actually working across the majority of your advisor clients?
Yeah, we
partners?
have Salesforce, and I'm not here to plug it, but Salesforce Marketing Cloud is working really well for us, being able to have email drip campaigns for advisors, so they capture that lead. Oftentimes they're calling, and in this day and age, nobody picks up their phone if they don't know where the phone number is coming from. So then we're putting these leads into email drip campaigns and putting thought leadership content, information about the business, the advisor's value prop into these emails, and we're finding it quite successful. And in times, it could take up to 15 emails for it to actually convert a client. Where we're struggling, and not on the sales side, more on the tech side, is the connection between Salesforce Marketing Cloud and the Salesforce CRM, because it is a bit of a manual convert for the prospect to lead. So that's where we're losing in terms of the actual journey that the lead is taking. We're losing that piece of it, so that's something that we're actively working on right now.
Andrew?
Yeah, I'd say I'll give a more generic answer here. One, streamline your systems. As marketers, we hate when there's 5 or 6 different systems that don't speak with each other because we can't connect the data. And then a quick one around connecting data. Anything that's going to help with attribution, Salesforce can do this, HubSpot can do this. There's a lot of other cool tools out there. I often use the example of who gave the donut. So if I brought donuts today and I pass them to Corby and Corby gives them to Sarah and Sarah gives one to Anuja, the question becomes who gave Anuja the donut? So if I didn't buy the donuts don't exist, but if no one passes them down, how do they get there? And how do we make sure Corby and Sarah get a little bit of credit along the way and avoid simply using first and last click as our only attribution? That's the only way we can know what within our marketing is working. Otherwise, it's trial and error, and we take something out because there's no direct attribution, and everything falls apart, and our leads go down, and now we have to scramble to fix it. So anything that can connect those dots is going to be a useful tool to have.
Just maybe on that, are there any best in market sort of attribution tools, technologies, vendors, models specifically that you recommend that you're seeing work across financial services organizations?
Yeah, so for cost and simplicity, I like HubSpot because it's all in one platform. The reality is there's no perfect one, and a lot of them are in the $10,000, $20,000 a month range, which is going to be unattainable for a lot of businesses that are out there. HubSpot's not. You can be spending $1,000 to $3,000 a month. Our agency spent over $2 million developing our own software to answer this question because we weren't really impressed with what's out there. But HubSpot will do it. Salesforce Marketing Cloud will do it. No one's perfect, right? We're just trying to get as close as we can to the right answer.
Got it. And then back to Anuja.
Yeah, so I would echo what Andrew said there, because in the B2C world, I don't think there's that one channel that is going to cut it through. What is more important is actually the orchestration. How are all your channels working together? Are you able to connect those dots across all the channels? And more importantly, I think is there one source of truth that kind of connects all these dots together? And unless you have that, whether it is through the sales teams inputting data into Salesforce after having a conversation, or for that matter, your channels driving the right attribution, I think it's that single source of truth that is the critical piece here.
Got it.
Yeah, and if I can add,
go,
we're also, our sales team, I forgot to say, we proposed like sales intelligence software to them, and they were, again, no resistance, right? So, which was really good. So a gong, right, that can capture their insights and help report back. So it's like, yes, you can put the individual items from your specific call, and then we can track that in HubSpot, but this is gonna give us a plethora of insights, right? So it's like, how then do you have the right conversations at the right time with those people, right? And that's gonna help that feedback loop in there. And that again is like more of a, like if you're doing like a tech demo, like you expect your call to be recorded. In insurance, maybe not, right? With the broker, so we'll see how that goes. But at least our sales team's on board, and I mean, it will really help.
I called my insurance on Friday, and I got a message that said this is being recorded. So, but it was a claim, and it wasn't me; it was my son. Oh, don't let your kids drive your car. Anyway, dangerous. So data. So scale up to large org when we think about the quality and the volume of the information. So you've got probably like a willingness and an ability organizationally to get more breadth you've got a ton more clients, so there's depth, but maybe historically not as much depth because of the business model. So when we think about data, and we're, as an industry, as an economy, shifting to much more first-party data, being, as we've heard in all these presentations, really a necessity to performance and to growing your business. What do you think about how data can today and will in the future be used to really supercharge your demand gen strategy? What data, if you want to share, are you using? Anything around sort of the privacy compliance way and getting your organization to sort of support that? And if there's a specific example, I know we talked about lead scoring, came up a couple of times, maybe thinking of an example of data. So let's just make it anything data related. And maybe I'll start at the agency who sees a lot of stuff in a lot of ways with Andrew.
Yeah, I think it's really important that everyone has a CRM. So if you're in an organization that doesn't, that's the number one place to start, because if it's not measured, it's not tracked. And if you don't have your own data, then there is no first-party data. This part will apply to some in the room, but some are going to be restricted because of the restrictions that exist within the ad platforms. But if you're in your insurance or financial adjacent type industries, you can start doing offline conversion tracking, meaning you can pass through things like Google Click ID and Facebook Click ID into your CRM, and you can automatically create your own list using that first-party data. And what that means at the end of the day is, if you're, let's say, offering home insurance, not everyone who looks for home insurance is going to be a good customer for you. So how do we make sure we only show up when the right people perform that search, and we don't show up when the others come? And that data connection is the piece that does it. In a chat with Google just a couple weeks ago, they suggested that we're not far from a world where we simply give them access to our CRM, give them a budget, and say, go give us customers. And that's going to be the result. We just feed in creative into the system. That's the path that we're headed down. But the first step for everyone in here is to make sure that data is there, that you're populating it. If you're in banking or if you're in credit, unfortunately, Google's not going to let you do that, neither are the other platforms. But that doesn't mean you can't collect the data. So you can gather information, and you just have to manually infer what needs to happen with that. So you need to create your audiences yourself. We just can't do it automatically.
Not a lawyer, so we're just, it's opinion. Okay.
Yeah, not a
Or do you
legal
work
opinion.
for Google, so we're good. Maybe Anuja, what are you seeing on data?
Yeah, sure. I think it comes down to first-party data. I totally agree with what Andrew said there. Your CRM, your first-party data is very, very important. And in fact, what we have realized is using the first-party data, layering on all the insights and attributions that you can get, the enhanced attributes that you can get from Environics, for example, and also using deterministic signals. Maybe it is the credit behavior, your funding velocity, or for that matter, how you're engaging on your digital assets and the patterns. All those combined together has helped us to create that predictive model, which in my opinion has far exceeded those pixel-oriented lookalike models that we created in the, not just a few years ago. So I think what the first-party data helps to do is not just be privacy friendly, but also be enhancing your performance. So definitely that first-party data and CRM are your best friends here. To just give an example there, recently we came up with a model, a propensity model to see who of those customers are more likely to have First West as their primary bank. And we based it on 2 action items there. One was high media spend, and second was how do you trigger the messaging differently. So when it comes to that, we saw that the people who had the higher propensity, of course the model was built in-house with the CRM using a lot of dozens and dozens of variables. But what we found there was people who had high propensity, we used higher media spend, we went more after them. And people who had low propensity, we tweaked our messaging to talk more about why than what. So not what the offer is, but why this is an important offer and why you should consider as a primary bank. And the result, although early, so it's just been a month, but I've seen 12% reduction in the CAC, the cost of acquisition. So if you like that first-party data and the models that you develop over those first-party data and attributes together are much, much more performance-friendly.
Madison, I'm going to lead yours a little bit with when I think it's an added complexity. Who actually thinks they own the data in your org,
Yeah,
right?
it's a
In a referral-based business, in
Good
theory.
question. Definitely the advisors that we work with for sure. But you think about the first-party data. There's 154 instances of first-party data, so it's a little bit tricky. On the B2B side, when we're marketing to advisors, what we're trying to get to now is more account-based marketing. So, partnering with some of the bigger publishing companies like Wealth Professional, Investment Executive, they have this data in-house and they can target exactly who our audience is and who we're trying to get to. So that's kind of where we're leaning in more so on the B2B side.
Got it. Sarah?
Yeah, I'd say where we're going to focus is lead scoring. Now that we've got that lead scoring model going, like segmenting, right? So to the actions that we've defined as what we think are intent, seeing like, well, is that valid? Are those actions actually the right ones? So is it like, visited the product page 10 times in 6 months, attended one webinar. So we're gonna, look to segment those to see, well, what are those true buying factors and how do they relate in terms of where they ended up at the bottom of the funnel? And then also look to create some like personas too, like leveraging that first party data because we have it, right? So we should use it as much as we can.
So you self-declared a scale-up, and then we've got the other end of, you've got like mass scale, go big, go broad, and then you've got like super high touch, nurture, and you mentioned sort of $1 million plus high net worth client targets. So when we think about the balance in each of your different orgs, again, agency, you've probably got coverage, although we could even talk about how you acquire your clients. But when we think about that balance and what the right mix is of scalability versus high touch, what do you think is the right mix? Where's the line drawn? How do you minimize waste and irrelevance when you're not talking to the right people? Maybe we'll start with the potential high touch.
Yeah, it's a good question. From a scalability standpoint, we are on Meta and we're primarily having our advisors advertise on that platform. So we're trying to really get to a place where we're qualifying those leads before they come in. So it's a simple question. Once they see the ad, before they fill in the form, it's a simple question of, what are your investable assets? And having that scale, which allows the advisor to determine whether they are actually a qualified lead and they want to do the work to follow up with them. The second piece is we actually have a lot of advisors that are utilizing their current client list as a way for referrals. So they're hosting things like webinars or educational sessions for their clients, or just sending out videos of what's happening in the global marketplace and what people need to know as it relates to their investments. And from there, they're starting to get referrals with other clients and push that out within their own kind of network.
I think the meta thing's interesting. Are there certain, coming back to the data piece and just mashing it in for a second, are there certain data points or signals or strategies that maybe help refine in a mass market like a Meta that really touches everybody for some purpose, mostly from Facebook Marketplace these days, that seems to be working in that high touch to sort of filter out the noise?
I mean, we're trying to find that out, but we are using some certain interest targeting that, certain sophisticated investors typically follow, whether they're following certain pages or, one of the pages that a person on my team who's in this room had the idea of is targeting people who are following private school pages, because typically the people who send their kids to private school tend to be in a certain age demographic, which has worked out quite well. So kudos to her, and she's here. So.
Or they choose to drive really cheap cars to then send their kids to school.
Yeah, exactly. Or luxury cars or luxury watches. Finding those niche interest traits that these demographics have.
Got it. Maybe Sarah, on the opposite end, as a scale-up, how do you think about that high-touch nurture versus like just get as many people to see your brand and touch your brand as possible?
Yeah, I mean, I would say like top of funnel, scale, low touch, bottom of funnel, high touch. Not as much scale there because we want our salespeople to be able to have those conversations, and then also we want to be doing our job, bringing in the leads.
Got it. Anuja?
So I would say a little bit differently here from a B2C perspective. Because it is a world where we are going to use all the three parts of the funnel, awareness, consideration, and conversion, actually 3 points here. One is you need to segment smartly and optimize intelligently. Automate with dynamic content frameworks to reach the right people at the right time with the right message. And finally, using the human touch points very strategically and really only as necessary. It is a digital world. People are using digital footprints, whether it is your inboxes and whatnot. As long as the message is very clear and compelling and reaching at the right time, I've found that strategy to really work, especially if you're using the dynamic contents.
Got it. Andrew?
Yeah, so from a scale perspective, I view quality over quantity to a certain degree. So to show a little bit of love for the salespeople, because I know we were a little tough on them at times, just filling up more leads into the sales team isn't always a great way to scale up, especially when those leads are low in quality. So focusing on what leads are actually actionable and worthwhile is a big piece of that equation. From a high touch perspective, we get to do that at the agency. So when you hire an agency, you're putting a lot of faith in us and putting budget in us, and you're hoping at the end of the year that you're proven to be right. I think mixing the two together, I hate a digital-only approach. I don't like a hands-off approach. I think clients move a little bit faster through the funnel than a lot of us realize. So the idea of getting your qualified leads in and then having an actual outreach and building connections is still a big part of the equation. And the real recipe there is just get the sales team and marketing team moving in the same direction. Once the sales team sees that things work, they tend to adopt them pretty quickly. So as you can get everyone on the same page, then you're going to get a much better result.
Yeah, I'll second that. I mean, for us, it's also about supplying the advisors with high quality capabilities decks, with high quality informational one-pagers that they can then give clients. So you're getting not only the digital part, but the face-to-face, which tends to be more valued in this company, in this industry.
I think those are great points, and we can start with you on the next, but it ties in. I think hopefully it's where you're going. But when we think about, this is great, there's data, there's technology, there's tools, there's assets, there's strategies. But at the end of the day, when you have newly acquired sales forces, or you've got advisors kind of run their own show in theory, people, right? We're talking about change, we're talking about adjusting the way that you work in order to now start to think about maybe corporately and digitally and omni-channelly driven lead generation platforms. So when we think about collaboration and change management, what needs to happen, what's working, what's not working in terms of getting the buy-in of your partners, right? You've got legal, compliance, sales, marketing, operations, contact center support, everybody down the funnel. Maybe we'll just go like end to end here and kick it.
Yeah. For my sake, from a B2C perspective, where I'm doing only campaigns that are customer facing, they've been mostly digital. So less interaction with the salespeople, or for that matter, call centers, etc. But whenever there have been situations, the most, I guess, pressing point there is how do you get the salespeople or the call centers to really update that single source of truth. So whether it is you're using CRM, Salesforce, or Dynamics, how are your salespeople actually updating it with the real-time conversations? Because without that, the funnel gets broken. Mm-hmm. And the only way I have been able to achieve or reduce that friction is by really going there on the floor and having a conversation with them, showing them what you're doing, and really bringing them in the process with you together, from the start to the finish. In fact, even from a marketing lens perspective, what are we doing to market? What are the messages we are going ahead with? And that kind of has helped the salespeople come in on board and change the way they talk to the customers when they see a certain marketing messages, cater the conversation to the marketing message they have seen. And really that has what has helped us to move forward with this.
Yeah, it always starts with your goal, right? So the goal is, to generate revenue, right? So that's what sales wants to do, and so does marketing. So as long as you can kind of sit at the table and say, okay, our goal is to generate revenue, you can move back from there. And last week when I presented kind of our funnel model to the sales team, I was like, we kind of are gonna live and die by this funnel, right? Because understanding that we're all getting to this common goal, even though we own different parts of the funnel, is what's going to make everything flow and be super easy, and also allow us to speak the same language, right? Because sometimes we might be talking about the same thing, but we're not speaking the same language. It's like, oh, are you talking about the leads or the SQLs, right? So, and it's a bit like tedious, but it will make everything work. And then even like product can get on board, underwriting can get on board, right? So it's kind of aligning, and even just the whole organization to like a sales focused culture as well. I find that's helpful.
So you probably have like one general client, and then they need to shepherd that inside the org? What are you seeing differently?
Yeah, we have to sort of help with that a little bit along the way. I'll give you sort of a layer on to what Sarah said, something that works best with clients. When your marketing team's goals are aligned with the business's goals, you're going to have a lot of success. One challenge we see quite often is our goal as a company, the shareholders are demanding an X% increase in revenue this year, but I gave my marketing person a lead target. And we joke at the agency world, it's our objective to get our client their bonus at the end of the year, whether that's the CMO, the VP, the marketing manager, it doesn't matter. We got to get them their bonus. When you told them that they have to get 10,000 leads this year and they have 8,000 through November, they're going to increase the budget in December and they're going to get 10,000 leads regardless of whether that results in revenue. But what if they could have hit the revenue target off of 3,000 leads and they were just better leads and they could have saved you budget? So make sure that the marketing team has the same goals as the business, and then make sure your agency has the same goals as the business and the marketing team, and everyone can paddle in the same direction and get a much better result.
Yeah, aligned KPIs, aligned outcomes.
Yeah, 100%.
Killer move.
We have such a sliding scale where we are. I mean, you have people who think that they're marketing and they're not doing anything of the sort. And then you have people who don't think they're marketing and they're actually doing things like webinars or quarterly newsletters, et cetera. So, for us, it's more of an educational standpoint. And what we're trying to do with the 154 businesses that we have that we oversee is educate them on what marketing can be for them in their business and how do we supercharge the AUA that they have as their own individual business, and then breaking it down from there, because lead gen may not work for everybody. Webinars with existing clients and then referrals could work for another business. So for us, it's more of the educational standpoint, and then helping some of the older demographics understand the benefits of lead gen, especially for the younger associates, because I'm sure, Corby, you're experiencing this as well. There's a lot of retirees that are going to be coming up in this business in the next couple of years. And so where does that book of business then go? And how are they continuing to grow that book of business? How do they sell it? If that book is stagnant and they have an older demographic of clients, how do you even sell that? And so what we're trying to educate them with is how do you fill not only the pipeline of prospects that you have, but also the clients within your book, so that they're younger and they're going to be with you for several years and you have the opportunity to sell your book. So all of that kind of ties into what we're trying to do from a demand generation, from a marketing standpoint, and everything that we're trying to do to support these businesses.
Awesome. Well, thank you for the discussion. Madison, Andrew, Sarah, and Anuja. And we've got a couple of minutes for questions, so there's a couple of mics running around. Feel free to raise your hand if you've got something for anyone up here. I've got one, if nobody does. Oh, okay, we'll go here.
Hi there, I'm Selena from JP Morgan Chase. I have a question regarding we talked a lot about first-party data, leveraging that to make lookalike audiences for demand gen. We know that we're moving into a cookieless, very private world, and a lot of our banking regulations aren't allowing a lot of us to use first-party data to do lookalike audience for demand gen. What are some of your experiences in tackling other type of strategy? We talked about interest-based targeting, contextuals really coming back. Are there anything else that you've tested that have shown really positive results?
Yeah, as much as I hate to say it, search is coming back stronger. I know that sounds bizarre with everything that's happening with AI, but AI is not overly transactional yet at this point. We still get intent within keywords. So there's a lot more demand now for SEO, a lot more demand for paid search than there was, especially for those that have restrictions in place, because when I say I need to get A, B, and C as a service or A, B, and C as a provider, there's no need to check the demographic data as strong as we would have to if you were just generally searching for banking or finance, let's say.
Yeah, I'll second that as well. There's only a couple of our advisor businesses that are using search engine marketing, but they are having a lot more success with qualified leads. You think about the people that are actively searching on Google, they're much deeper in the funnel. They're looking for that answer. So if you can show up in that place, you're more likely to convert that lead than if you're passively looking on social media or on YouTube or what have you.
Yeah, I would echo that as well, because we're seeing good traction on our search as well. And then also I think too, just working with trade publications more specifically, because they have the exact audience that you want. So it's kind of for insurance, it's a no-brainer for us to do more with those through those channels, because they already have the people there. So
awesome.
And I'll just add a tool that we use, which is Environics, because that has helped us to understand the attributes of a consumer, where they belong, and really be very targeted when it comes to showing your messages.
Awesome. Well, I said we were the last thing before lunch, not beer, so that time is now. So feel free from now until 2:10 to come back into the main room. Meet the vendors, scan your badges, get some swag if they have it, get some food, and really appreciate your time today. And thanks to all the panelists.
Thank you.
Thank you.